Trading and investing. If you're new here, welcome. If you're not, welcome back, guys. We got a great session ahead of us. It's an important one. It's one of those where you want to lean into it and make sure that you are ready to absorb everything we're going to be talking about, which is not only, and of course, we're going to be talking specifically about topping patterns. When we take a look around, a lot of people right now are like, hey, wait a second, M2 is skyrocketing. Where is Bitcoin? We talked about M2, how it lags on the tops. Do I personally think that we are close to topping? I do not. I think that likely what's going to happen from here forward is that we're going to be muddling along, and then likely sometime into the future, I don't know what you want to call it, by the end of the first quarter, timing these things is really difficult, that we're going to see a re-acceleration. That's my own opinion of what's to come. Nevertheless, I want to make sure that regardless of what happens, we do what we do best, and that is stay on the right side. We're going to be giving a strong look at some topping patterns, how we could prepare ourselves, and then we're also OG Villages went ahead and created a spreadsheet calculator. This is really going to help us and everyone really, they talk about MIT study. Those who write down their goals have a much higher percentage of achieving those goals. We are going to go ahead and put it all in together. Great morning, everyone. Glad to be here with you all. Markets finally showing a little bit of red, and I'm just going to go ahead and just remind it here of our seasonality chart, and it's unbelievable the ascent of this current track. Never seen anything like it. The closest is obviously, and they're kind of converging on each other right now. The 1998, both of these S&P 500 coming off back-to-back years of 20% plus gains. It's only happened 3 other times, 4 in total. It is very rare to occur. Interesting that coming off of interesting that both you seeing Fed cutting right now, Fed cutting around this time in 1998 as well, leading to the juice of what was ultimately the dot-com bubble. We got a lot to talk about. I'm going to find the flow here and get into it. We'll start off though with Bitcoin. And yesterday we were looking at, is that a head and shoulders pattern that is developing? And you all know me, and I don't like head and shoulders patterns only so much as that you got, is it going to, is it, you know what? Ace, I'm so reminded of August 2022, Jackson Hole setting the stage, and Powell's like, there will be pain. My man almost called the bottom. There has not been pain for the last 3 years. It has been up and to the right. He didn't get that right, you know? He did not get inflation was transitory right. He did not get that tariffs are inflationary right. He doesn't have the best track record whatsoever or anywhere remotely close. Now, could he be right this time? I'm reminded of a lot of people. I'm going to go ahead and just jump over and then we'll come back to it. And I'm just, seeing charts like this. And I'm like, man, this guy's, first of all, no, there's not one person I know of. There's not one person that I know of who thinks 2.5 years into a bull market that this is early cycle. I've never heard that type of comments come from anyone out there at any point in time. Is this late cycle? Yes, for sure. There is a lot of chatter whether or not this is late cycle. There are a few who wonder, could we go from late cycle and could this be, extend out further? And we've looked at some of the things and some of the signs showing that maybe we could see a reacceleration. One of the great cautions was monetary policy. So restrictive. QT continues to run. We saw rates elevated. Did a 25 basis points cut alleviate that? No, not yet. Will further cuts throughout the rest of the year and into next year? Absolutely, no question about it. What about QT running? Well, that was alleviated in so much as that the bulk of it is no longer running, but they're still running. They're still running QT. It's all restrictive. once the Fed's monetary policy goes from strict, like tight, and then to more neutral, does that help the potential here for reacceleration? Of course. Is that monetary policy aligned? No, no. Monetary policy aligned as far as we talk about risk, the Bitcoin, the Boulevard Bulls running. That's when the Fed is forced to return to outright QE. And look, we all know the game. They're going to try to extend that out as far as possible. There are no signs that we are even close to that portion of the story. Nevertheless, here we are. If you look at this chart, though, when the Fed cuts, expect bad times ahead. I'm just going to jump. You remember what was happening over here? We just talked about in 1998, the Fed had cut. Well, here's a cut back in 1995. No recession. Market cycle actually kicks off a mega 20% return plus the next 2 years. What happens here in 1998? Fed throws fuel on the fire and really 2 cuts, no recessions. Why, like how come there's no Fed cuts in red next to this area right here? How come there's no next one this here? How come there's one not over here or here? You got to be careful what's presented to you. But more importantly, I want to hesitate. Well, all right, the Fed cut September of last year. What was this guy's attitude at that particular point? And I went ahead and I searched his name and I searched Fed cuts September 2024, imminent recession. The markets are about to crash. You got to be careful about what signals you're seeing and where you're seeing them. And then go ahead and listen. We always say, God, those who have a history of getting it right, you got to use them as a vantage point. But when you just have a history of being doom, that's another story over here. What about yesterday? We were looking at on Bitcoin a possible Head and Shoulders. And let's go ahead and jump over here and this is being presented by, this looks to me like Caleb's TA as well, pointing out seeing a bull flag with a potential inverse Head and Shoulders. I don't see, just like I don't like Head and Shoulders, I also don't like the inverse too much. The trend line is what matters. So look at the trend line. Could this be a bull flag developing on Bitcoin? Yes. Is it weird with what the neckline looks like because of this massive spike up? It is, but just point being over here as we jump back and look at what could be an inverse Head and Shoulders. And here's an important line, a trend line. And we looked at this. And if this were to break, we say, all right, if this were to break, we looked at the expected move and we put the expected move in. And I guessed it yesterday. I called it to the exact number, just guessing, right? And I went ahead, I tried to get it like the longest, and we said right over there into 90K. Guys, me, you, not any of us would be surprised if that were to happen. And if that were to happen, I think that becomes inviting. I think that becomes enticing. And of course, there would be a lot of fear. And don't forget, we are into a period, not just normal seasonalities, post-election through at end of October. There could be pressure. Right now, buybacks going into a blackout window. It's going to be, is that why we see this portion of the seasonalities? I'm not sure. CTAs max long doesn't mean that they're going to sell, but they're not, and I mean, sorry, it doesn't mean that they can't buy more, but the odds of them unloading and selling any downward move, that becomes highlighted. Are we bearish or are we bullish here? Or are we surprised that the markets have continued to accelerate as far as they have for this long? That's me. I was expecting a lot more drama coming into this period that has not yet materialized. It doesn't mean it's going to materialize. It could materialize. I am surprised that we went from, remember I was like, listen, I think any longs that we take are just going to get chopped up. I don't have any good feelings about this. And we have been, and I can't get into positioning with y'all yet because I have this loaded up. So I'm going to come back to this, and then after that, we'll get into positioning. And we know FNGU gave back a lot of profit today, but still holding 3.7%. We see that TQQQ giving back profit today, but still up 8%. And Tesla continues to defy gravity over here, up 18%. So regardless of what I thought was going to happen, it really does not matter. It only matters of how we positioning and what is happening. We're going to come back to this in 1 minute. I just want to keep going over here, and I wanted to get into, so this is, what is a potential negative outcome? But guys, just hold on 1 second. And you have to see that, like, here's the last local low. Is that nice to see? If we take that out, right? If we see a lower high put in and then a trend line break, that's not bullish. That's bad. Wait, are we in the market right now? Bitcoin bull runs? No, we're not. We're out on the sidelines. Kind of say, what about our swing trades? Nope. They're also on the sidelines. Is momentum rolling over? Yeah. By the time, if we get to a position where we see our swing trades kicking off on the short side, does that likely a signal that we are oversold in this particular? Yeah, that's when I would become, I would start to become bullish. Now, this is a potential head and shoulders, and hey, listen, that could happen. Wouldn't be surprised if it did. Do I think it's a head and shoulders? About as much as I think that this is an inverse head and shoulders. I don't, trend lines though I like. And here you could see what would be, and of course it's different than other person's art, which is like this. I just look, it could be, I don't know. It's just not how I do it. But here you would see a resumption up, right? A break above this trend line and a repair. And a repair is going to be very important as we look at potential topping patterns or how markets have topped in the past. Because here's the thing, in real time, you never know. You could draw lines to manage risk around. And you drawing lines to manage risk around is a way better strategy than the majority of people running money have. There's no question about it. But you don't know when you're going to have a break that leads to a massive correction, or you're going to have a breakdown and then that impulse is going to be faded and a repair up. So if you're committing to drawing lines on a chart, you have to stay committed to following them and staying on the right side. Now, one other thing I want to look at over here as we see what the next repair up would look like. Let's take a look and just see off of the last low, right? And you can see that it's kind of neat. So that low takes away a little bit of noise on over here. This is a little bit of noise. And you can see resistance, still holding support. Yeah, if we break down from there, I expect that we can see some pain. Is this the top? Is the top already in? And again, that doesn't add up to me so well. But I guess I would do it more like this after the initial breakdown and repair. I wonder if you could do this. That's definitely a little cleaner over here, and that's a sell impulse. But we got neutral. We're out of Bitcoin bull runs. We're out of our swing trades. We're neutral. And whether or not this accelerates further, I mean, we're still above major breakout that's been consolidating. And yeah, it is consolidating in what looks like, I mean, bull flaggish, but it looks more channelish to me than bull flaggish to me. And sometimes channels have a way of a longer correction and even breaking out to the downside for a liquidity grab before finally resolving themselves. So I would say we are in a major upturn in Bitcoin and neutral right now, and that's where we are. It's on the calendar. I'm glad you mentioned it. And then we have, more importantly, I believe, PCE on Friday. I don't think that's either one of them would be or is running the market right now. And yeah, that's my feeling. So a surprise from unemployment claims, that's for sure, and it's been on the calendar for forever. Would that signal potential? The Fed seems like verbally they're trying to talk down the amount of cuts, but it seems that we're looking at another 2 cuts into the end of the year. What could take that out of play? I'm not so sure right now. Um, so anyway, let's jump back in and let's get going over here and keep going and gain some momentum. We'll jump over here, and this is interesting, and it's related to tops. And first of all, if you're not familiar with the work we've done regarding why M2 is like poor at best, go ahead into the X, just search like Traders Mastery M2, right? Or monetary base total, M2, you'll find it. And it's just, the thing is that every time Bitcoin tops, M2 has kept going for months up and to the right. And Bitcoin has corrected anywhere between 40 and 60%. It's really bad. It's at best, it's just poor. Now, this is kind of important, I think. I mean, I can't deny what I see here. I'm not can't deny. I can't find a fault in it. I looked at that other poster and I was like, well, listen, you're selectively picking what you want to see, and you did it like last year when the Fed cut. You were like, hard landing, recession's coming right now. A year later, market's up tremendously. You're saying the same thing, and in your chart, you're omitting other periods where the Fed cut, like in 1995, like in 1998, like in the eight, and you're just like, so it doesn't add up for me. This adds up. And you could see Bitcoin tops over here in the blue. You see Bitcoin topping over here, Bitcoin topping in November. He's pointing to Bitcoin topping right over here. And then you have gold and M2 tops. So M2 hasn't topped yet, obviously, and you could see here that M2 is topping after Bitcoin in these instances. And not only that, Bitcoin corrected 60%, Bitcoin corrected 40% before you get that top in M2. So there you go. It's a good visualization of what we were looking at. And he has gold over here, and gold not topping until M2 tops. You have M2 screaming up this morning as we speak, not yet topping. Over here, you see gold and M2 topping at the same time. And then right here, you have M2 and gold continuing up. So I guess rewind, and yeah, there's nothing of value here. It's showing the same work we've looked at, that Bitcoin tops well before M2 tops. But I thought that maybe, anyway, I thought something different was happening here, and gold was giving a signal. I don't see anything signal wise over here, and I could point to this one area to like debunk this. I'm not trying to debunk it by showing why it's not useful. And look, the lesson here is two things: don't trust, verify, and do your own research, and figure it out. Right? Well, here's a great instance over here. We have M2 rising, we have gold rising, and we had Bitcoin had topped over here. So you could have drawn those the blue line over here in January 2024. And then since then, you saw M2 rising and gold rising. So is that any different than what we're seeing here right now? No, it's not. And that's why M2 is such a poor indicator. You won't know until after Bitcoin has topped, and months later, when M2 eventually does, whether or not it was the right signal. So there we go. Hunter, we're going to have to come right back to that in 1 second. Hunter, I'm going to go ahead and favor this for 1 second. We'll come back to that. Interesting pivot, by the way, from afar, of the U.S. under the presidency of Trump, and kind of like being like, Europe, go ahead, you're on your own. Ukraine, you're like, there's no way you're gaining back what you've lost, and you're probably just going to lose a lot more lives and a lot more territory to now being like, yeah, I think Ukraine, as of yesterday at the UN, I think Ukraine could win back what's lost and turn this war around. It's a major pivot. I don't know what that's all about, and including yesterday at the UN, the president of the United States saying, yeah, if any Russian aircraft cross NATO's borders, NATO should shoot them down. So there is major potential geopolitical escalation ahead. A lot of people think that the move up in gold is reflective of that. I don't. I think it's reflective a lot more. We got a lot to talk about that as far as well. This is a pretty scary chart, I think. And by the way, this is just starting off of, we were into our just a line of resistance. This is structure, meaning that this happens throughout. And for example, if I were to go ahead and move this up, I could find other places of structure all throughout. But this is off of the most recent touch right here in December 2021, a period that we've entered into again. And you come down on the daily, and that is a strong reversal in place over here. But markets have come very far very quickly. Does that mean that this is the peak? Is this a potential topping pattern that we're seeing right now in real time? And we're going to take a strong look at that. So I'm come back to this over here, though. And by the way, ultimately, where this plays out, if this is just a view, right? Just the view. And he's talking about same playbook as Trump's first term, 2017 to 2021, although this was, right, the lockdowns. And then, now, interesting that this low, this would be a very painful scenario, I think. An opportunistic scenario, but can you imagine that the April lows were taken out in haste? Could you imagine the April lows are taken out in haste? This is a good looking chart over here. Interesting too, the sweep, the rounding bottom sweep over here. All right, consolidation, breakout, consolidation, breakout. Even this little dip over here. Is that going to just keep repeating? Are you going to see the same thing, or does it break down here this time? Imagine taking that would be dangerous. April low, if a lot of people use that as a vantage point, and then imagine liquidity grab into this. This breaks down further though. This trend line over here, that's a good trend line to have in play. Breaks down further, a lot of bears strongly claiming victory. Would we be any higher? Is the 2022 low in place? Are we looking for that right now? I want you to be able to look at everything. I want you to be able to look at views that are opposing to yours and come away with it more informed. A lot of people on both sides of the table are really unable to do that when it comes to gold and Bitcoin. And we have to bring the conversation back to that. Cabby was like, hey, look, like, watch the first 3 minutes of this video, and can you imagine that happens? And not only that, I listened to this video, like in this section over here, more than several times this morning, trying to really understand and absorb all of it. And by the way, at the end, and this is something that we've touched on, we've seen when the Russian advisor said that recently, that the U.S. is trying to use gold and cryptocurrency to basically pass on the devaluation of the dollar. I don't understand, and if anyone here does, I don't understand how gold plays a role in all of that. Like, if you look at this chart, which is an interesting chart, and this is ever since 2022, when what happened here was, this is when the US and the EU confiscated Russia's central bank reserves. And since they've done that, there's been a clear signal, forget US treasuries, we are interested in accumulating gold. It couldn't be any clearer, and it's accelerating. And it's why, I mean, we saw it priced in the chart in so much as we saw the gold right here in 2023, the super cycle begin. And what's interesting to me is that there's a very fundamental shift and reason that this isn't just markets and lines on a chart. There is a massive difference taking place when, for the first time in 40 years, now central banks own more gold than U.S. Treasuries, and that's going to continue. That's a trend that's not stopping anytime soon. I don't know, and I would like to know, like, because I could picture a world where the U.S., you know, continues the rise of stablecoin use, and the projections by the U.S. Treasury about how much they're going to grow in a few years is tremendously. And I can make the case why other countries, not the countries themselves, why other people in other countries. I mean, look at Argentina and look at the stablecoin use. It's immense. Why? Because people prefer dollars. And you could go to Africa and you could say the same thing. All through Latin America, you could say the same thing. Do you think that Russians would prefer the dollar over the volatility of the Russian ruble? Not only that, I mean, it's been a long time, but 20 years ago when I was in Russia, like they used dollars and they were paid in dollars. So yeah, they're like, I don't, it's a long time. It's been 17 years. I don't know what it's like on the ground in Russia anymore. But back then, the dollar was the currency of choice. So do people prefer rubles? Do they prefer dollars? Which one are they using? And if the government, like the thing is though, not that in Russia, like they allowed it, but in Mexico, I've been to, like, some banks allow you to open up it's like a euro dollar. It's an account that digitally is in dollars, but you can't move those dollars out of there into another country. So if people could use stable coins, it's the people of the countries that are going to probably and likely embrace it, and you'll see more of a worldwide use. And then if that is devalued, then it's almost as if worldwide a greater share of the people are sharing in that devaluation. But my question is gold and Bitcoin. So, by the way, let me just revert back. I trying to make a case for it, but what I see is for sure that becomes a greater bid for U.S. Treasuries if each stablecoin is tied to U.S. Treasuries and backed by it. At that point in time, you have this more organic bid for Treasuries, especially as these other sovereigns are actually providing less of a bid. So I see it entrenching the US dollar worldwide instead of coming to a point where the United States is forced to become more like Japan, where the central bank needs to print money and buy their bonds because no one else is. So I feel like that the use of stablecoins and stablecoins backed by US Treasury, that helps entrench the US dollar. I'm not so much sure that I see it as a way for the U.S. to devalue their debt as much as I see it as a way for the U.S. to sustain their bid into the market and dollar dominance. That's the way I see it. I don't know how gold plays a role in that. And the advisor is saying they're using the gold market and the crypto market. So that's something I'd be interested in having a broader perspective is, well, the Russians have been buying gold since 2008. And ever since, the US first weaponized sanctions against them, Putin was like, all right, you're forcing me out of the dollar. And interestingly enough, I said, I have no idea what's happening on the ground. That was right around the time that I was in Moscow. So I don't, back then, and before the dollar was weaponized against them, they were completely embracing the dollar. Like that was the currency of choice in Moscow. And I don't know what happened after the U.S. began weaponizing it when Russia sold all their treasuries and began stacking gold. And China too has been stacking gold this whole time. So how could the U.S. and why are they mentioning gold? And these are questions I have when that benefits them. when I say them, I'm talking about China and Russia. They continue to stack gold and accelerate that move. Um, Another interesting part of this, and again, several times I've watched all this, keep listening, and I will. I'm trying to absorb it, trying to understand it. One of the interesting things at the end, and I've heard this potentially before, is, and I think you all just might enjoy this. I first heard this on a Tales from the Crypt podcast, and I'm hearing it again now, and I'm sure he probably heard it there. But the it's being articulated that, a lot of people are like, what the Bitcoin Reserve Act? Like, is the U.S. going to start actually buying Bitcoin? And why that would be a really bad idea, in so much as that, if we would call it an adoption event, and if it happened, it's going to cause a massive FOMO. If the U.S. is committing by law to purchase X amount of Bitcoin for X amount of years, it gives everyone else out there the reason to go ahead and FOMO. What this is like a theory, and the theory is that, well, maybe that's what MicroStrategy is doing, and using a private company out there, and it's accumulating Bitcoin and doing it in a way that doesn't suggest that the United States is, and then tying it into how at another point in time, then, in the same much as that the US just took 10% stake in Intel, the US would take a stake in MicroStrategy in order to have that ownership. I'm open to everything. I could foresee a world where something like that's taking place. I don't know how that would go ahead and help the US with its debt. By the way, Cynthia Loomis is, and I don't believe this is true. She's saying, when she's trying to promote her bill, that over the next 20 years, it could help the US reduce its debt in half. Anyway, just some questions over here that we're talking about, and stuff that I find interesting, which is why I'm talking about with you. This is the Depower, interesting too. So that not only, like, we're seeing and talking about the CEO of the Nasdaq talking about how they are looking to tokenize, and I don't know so much, for example, stocks that are trading on the Nasdaq, so much as a lot of private equity, and private equity could be something like SpaceX or OpenAI. And you saw what Robinhood did, and they started selling shares, not shares. You don't have any type of ownership to that, like tokens that are reflecting what they believe the price of these companies should be. But it seemed like that was a warning flag to the Nasdaq, and they were like, "Wow!" Not only Robinhood, but I'm sure they're aware of these decentralized exchanges that are more or less doing the same thing. So I think that they're being forced to kind of like have to tokenize in order to fend off competition. But that's interesting. Do I think Saylor is helping the US dollar? Um no, I don't think Saylor's working in cahoots with the United States, and this is their plan. I think that if it is felt by the United States at any point in time, it's to their benefit to go ahead and either confiscate all and or take owner, like, it's a government, it's a racket. They'll do what they want when they want. Um this is pretty important. Let's jump over to here, and we're looking at this is accumulating $1 million. Now, a couple of different things. This is talking about investing $10,000 annually, and with a 7% annual rate of return. See, it takes about 30 years going that route. What's interesting is that we were able to see OG Villages go ahead and went ahead and created a spreadsheet in order to go ahead and factor this in. And we have, like, CTM considers 70% as the goal and getting it done, right? And we're going to take a look at that. And for this purposes, I'm going to go, well, we're going to go, listen, all right, let's talk this out. First of all, I think this is like fundamental, and everybody should be doing it. One difference here is that this is adding $10,000 a year. We're not adding 10,000. This is just an exercise showing at 10,000. This is so like, guys, y'all familiar with the tulips and the tulip bubble? And like the thing about the tulip bubble was that like it never came back. And the thing about any bubble is it never came back. One thing that's interesting is you see the recent Bank of America and they talk about the lengths of bubbles, and they have the Bitcoin bubble that that ends in 2021. Well, it's 2025 and Bitcoin is more than 50% higher than where Bank of America listed the top of the last bubble. You know, it's funny. No, honestly, like first of all, there are people out there who are unable to understand what it means to live in a digital world. Much like there are many people that live in a digital world that are unable to understand what an analog world is. And it's interesting. You have like people that were born before Gen X, and a lot of them have a hard time understanding the digital world. And then you have a lot of Gen Z, and they don't understand an analog world. And, it's just interesting. It's weird going back to that time in Russia, there was like a separation like that. There were those that lived under the Soviet Union and they were unable after the collapse to be able to understand a different type of reality. They were lost. It was over. And then you had this new generation and they were like entrepreneurs. They were the only place that reminded me of it was New York City. No other place in the world except Moscow and New York City had that same type of hustle that I've ever seen. Um, and yeah, there are some people that like digital pet rocks is, I don't know, for my opinion, is pretty stupid. You have to be an idiot to call Bitcoin a digital rock at this point. That's just retarded. Don't even you don't get to speak my language. All right. So anyway, um that's you know, anyway. Um back to um back to what's important. Distraction, noise, importance. Sorry y'all for getting distracted for 1 second. A lot of people looking for attention, a lot of people need that extra bit of love. Um so I think it is foundational that everyone copy from OG's post, copy two of these, and one for stocks and one for Bitcoin. Okay. And CTM calls 70% getting it done. And we'll get to that in 1 second. I'm going to start this off though first, and you can see this would take, instead of taking 30 years to get to 1 million, if you were able to start with 10,000 and not add any money, and this assumes then not paying taxes. So for someone in the US, that might mean using a tax advantage account and or elsewhere, yada, yada, yada. But I'm not including taxes here, and I'm not adding 10,000 a month. We're just keeping it flat. And Behemoth, where are you, brother? What happened? What's odd, my man? And then you see that instead of 30 years, CTM could take 9 years, right? Now, what I want to do is this. I want to jump over here and I want to start with TQQQ. And TQQQ is our worst performing template by like a large margin, by a very, very large margin. For example, like let's say the average stock template that CTM has from 2020 till present averages something like 3,500% return. TQQQ averages 700, right? So it's by a large margin. Here we go. Let's see what it is. This is obviously including, so it's 1,000 now because things keep going and compounding. It wasn't too long ago. It was only at 700. And just jumping back over here to 2021. There you go. This is a better measure. From 2021, the last 4.5 years, it's averaging 370%. It is by far our worst performing template. And that's why we're going to take a look at it. And I'm going to go ahead and I'm going to start all the way. Well, I'll go work my way backwards then. I wonder, by the way, if, anyway, let's rewind. In the last 90 days, if you were to look at what CTM templates have done, all 6 together and average them out, it is, I believe it's a 13%. Hold on one second. 15.86% last 90 days, right? Goal is 70%. T-triple-Q we're going to look at. And for by the way, if this was half that, so someone could say, I'm going to look at half this, right? And this, you could say this could take 16 years, right? I believe you should have goals you believe could be not only achieved, but met and beat. And maybe you could use this for taxes. And so anyone here who thinks this is a long amount of time, I also want you to pay attention to what happens to the 5 years after. So forget the 16 years it takes you to get to your goal. Watch what happens in the next 5 years after that. That's compounding really, really taking effect. Love to hear that, Hunter. Oh, wait, Hunter said something earlier. Horizontal line on the T-triple-Q filter signals tops for the last few years. It hit 2 days ago. That's ominous. Talking about tops, that's great. I got to take a picture of this one, Hunter. Hold on one second. Only because I can't right now. Hold on a second. Hunter top. Take a look at that when we can. So back up. Hold on one second. I want to give you guys some perspective that's going to be really helpful. Understanding that T-triple-Q is by far our worst performing template. Let's look at what's going on over here. This is from 2025 to today, currently at 24%. All right. Now, it's different when you look at from 2021 to today and you're like 360%, right? More than it's compounding. You have to look year to year. So I'm going to go from 2024. 2024 is showing a return over there of 28%. 28%, right, is under 70% getting it done. Now, that's not fair because the reason we talk about 70% getting it done is because of not just T-triple-Q, because our other templates together, they will outperform T-triple-Q, every single one of them by a large margin. So for this exercise here right now, use 35% and just on T-triple-Q. All right, and this is under this year. This previous year is under what is the targeted goal. Come back to 2023. Okay, that one's over and over by a large margin, and it wasn't like a devaluation year. It wasn't 2020, and that's just going to make up for the other years because there will be other years. And another perfect example is 2022 bear market. This is buy side only, 0%. This is so important. So between the 2 years, right? Put them together and you're averaging and more than getting it done. But here's the problem. Here is what prevents many of you from not only exceeding your goals, but by like so wildly that you never even imagined, is that obviously everyone is focused on the present and everyone's focused on what's happened over the last 3 months and the next 3 months. Could you imagine you started in 2022 and that whole year how many trades were taken, by the way? 2 trades. So first of all, if you have the mental fortitude to be able to withstand that. Now, a lot of people, they went through a significant drawdown in 2022. All my friends were like, how come my advisor never told me to like get protected inside my retirement accounts? What, like everyone was angry, everyone was mad. There's a big difference between protecting your capital and all that forward progress that you're all looking to make and that we're looking to make all the time. By the way, you put them both together, those 2 years, and then yeah, we're looking for 35% here a year on the TQQQ. Yeah, that's way more than getting it done. That's more than double getting it done. But did you have the fortitude to be able to withstand those 2 years? 2021, that's the problem right there, is that most people will not. Normal year, 2021. Same thing as 2024, right? 2020, this was an outsized year. It's an outsized year because there was a major devaluation event. Could there be a point in time, whether or not it is 2026 into 2027, or if it's 2031 into 2032, or whatever, where we have back-to-back years of the pain of 2022, and pain only in so much as that you're not moving forward, you're protecting your capital. And if that were to happen, would you see something like a year of 2023 after the dot-com bubble burst and 2 years of down, and then boom, major move up, faded, major move up, faded in 2008 again? Yeah, you have, this is the most important thing you can do with your investment career, is prepare yourself to have CTM strong, the fortitude to go through periods of flat running sideways performance. This is what makes the difference with people being able to preserve and then move forward, or people getting hurt. 2020 was a devaluation year event, which is why the returns were outside. 2019 wasn't 100% return. That's our worst performer by far, right? Like this is back-to-back years of I mean, getting it done. But what about 2018? That was a hard year. You know what 2013 looks like? Let me show you. I'll just pull this up over here and make it easier on myself. 2018 was this is 2018. It ends here in December, right? We're buy side only, by the way. So the majority of the year is down, and it started right over, I can't even see on the thing. There you go, right there. So chop, 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 some upward, and then bash downward. That's a hard year. Trump had to come in over here in December 26th, meet with all the CEOs of I think it was the banks, and then say bye. The last time he said bye, by the way, was over here in April. The guy's got a pretty good track record, regardless if you hate him or not. That doesn't matter. It's irrelevant. Jumping back over here, and December set to 12th. Thank you, Ace. I didn't mean that. Ace is always crossing the T's and dotting the I's. Absolutely love it. 2018, minus 12%. Put yourself in a situation for a year where your goal is 70% across templates, TQQQ 35%, and you have a minus 13% year. Now, granted, equity markets didn't do well. Now the next 2 years were obviously back-to-back bombastic, 100% and then 130%, and then 2022 another flat year, not minus 12 but nothing. 2023 170%. You have to be able to, like, man, maybe everyone needs to start training here for some endurance events, some marathons. We need some marathon type mentality in here in order to get through it. 2017. getting it done. There you are. Anyway, this is, and by the way, and I should bring it into the conversation. It gets, this is the coming V4. And I said you should do this for, you should have one for stocks and one for Bitcoin, and execute off them both, because there'll be times and years where crypto is extraordinarily outperforming and years when stocks are, and you never know what happens in the future for either asset class. And, it's very important. Stocks, you could easily, dare I say, well underestimate here with the 70, and that was just T triple Q, just to give someone some perspective over here. So we have Tesla, we have now the beautiful additions of the spot ETF for Bitcoin, Nvidia, MicroStrategy, or strategy, I should say. This is, we talked about drastically underperforming. This is Nvidia from 2020. Let's go from the bear market until today, and which is just in line with about everything else we do over here. Let's go the last year on MicroStrategy. This is the last year and a half, since 2024. So T triple Q is the model that I was using, because it's our worst performer, right? And it's that different. I wonder, by the way, I really genuinely wonder whether or not buy side boost within our stocks would also provide a similar advantage, but we'll keep it cautious. Jumping back over here, and just to give an idea of now moving towards, could you imagine people drastically overestimate what they could accomplish in 2 years, and drastically underestimate what they could accomplish in 10. This is, and it's just going off of what's easiest over here. So I'm using, I don't have the ability to go just back 1 year, going back a year and a half, and then I'll do 2025 at the same time. This is Bitcoin, 160%. 2025 during the flat year of Bitcoin, which has been flat since January, 13%. This is Ethereum going back 2 years, 130% a year, 70% getting it done, 25% from 2025 till today, getting it done, right? This is going back to the beginning of 2024 on Cardano, and then going back to Trump destroying Cardano with his unruly tweet, still getting it done, more than getting it done. And then you have Solana, the last 2 years hanging in there. Solana was the favorite 2023, and then peeling off soon. And you average all those together for even this year, which is still got a few months to go, and the year before, and then V4 giving us the opportunity and the power to be. You have to dial in, and you have to dial in means 2 things. First of all, this OG Villages getting this out, this visualization really helps one to be able to have. Someone asked if this could be done in log instead of linear. I don't think so, but the numbers is what you want to focus on, the goals, the objective. And you have to understand there will be, specifically stocks with buy side templates, years where you're going flat, and then other outside years. So you have to have that long-term mentality. Now on V4 with crypto, trading buy side, sell side, doesn't really matter if market's going up or down. For example, I could show you what happened in the bear market of 2022. Bitcoin, more than getting it done. 70% getting it done. Mega outperformance. Ethereum, more than getting it done. Mega outperformance. Cardano, more getting it done after taxes, we'll say. And Solana lagging 20%. I'm going to imagine it's buying sell side 20%. Altogether, exceedingly outperforming and getting it done also in a bear market. Now, this is the goal. Are you happy to do it in year 6? Yes, there's no question about it. But that time is going to pass regardless. A lot of people, what happens is they take risks. They take risks in order to try to get ahead. And instead of getting ahead, they get left behind. I'm not trying to be one of those people and saying time's running out by 2030. It's over, the machines are here or anything like that. I think the future's bright and I think it's hopeful, but I think that you need to make good decisions in order to be where you need to be tomorrow. This is where we're going to leave it. I didn't get into my favorite part of today's session, which was going off and looking at topping behaviors. We'll do it tomorrow. That's why we show up every day and put the time in. Thoughts on DXY triangle breakout plotted against Bitcoin? It's interesting. A lot of people talking about they can't understand the devaluation of the dollar this year, in so much as you could go back to like the Plaza Accord when you had an actual accord and you had devaluation. Look, the last time the tariffs were instituted to China, it was the yuan that's basically devalued and to make up the difference of the tariff. So far, the dollar has devalued this year about 10%. Probably got more to go. It seems like it's the dollar, the one that is devaluing in order to make up the difference of the tariffs this time. There wasn't an accord. It was more of Liberation Day. This is the way it is. The dollar, because of its, again, the DXY is just an incredibly poor measure, in so much it's just measuring the dollar versus other fiat. That fiat is heavily weighted, more than 50% towards the euro. It's not including the yuan, the US's largest trading partner. It seems pretty ridiculous. And it doesn't include gold. And so it doesn't really, and again, if someone would have said, Jordan, in 2025, the dollar is going to devalue by 10, 12%. What do you think Bitcoin's going to do? I'd be much higher. And it's just flat. So the DXY is everyone have a beautiful day. We're back at it tomorrow, putting our work in and making sure that we do what it takes to do what it is that we've set out to do, and that is reach the highest summit. You have an edge like no other. That doesn't matter. Now you need to have the work ethic, the discipline, the fortitude. CTM strong. Have a beautiful day, everyone. God bless you. See you all back on the inside.